Hello everyone, welcome to Grover Academy. In my last video, I discussed with you golden rules of accounting. And in this video, I will tell you how to use those golden rules of accounting practically in making the journal entries. I have already framed a simple question including some entries which cover all the accounts. If you remember, I told you three accounts: real account, personal account and nominal account. Today we'll see how to use those rules of accounts in doing the journal entries. So let's start, guys. You can see I have written a question. Pass the journal entries of the following transactions in the books of Jason. That means we are talking about Jason. Before starting the entries, let me tell you one thing. When we are making the books of Jason, so Jason is the entrepreneur. That means he is the owner of the business. And the name of entrepreneur, that means name of owner will never be recorded in any books. Any books we will make. After general, we'll learn so many books: ledgers, trial balance, financial statements. In any books, we will never mention the name of owner, the entrepreneur. Right? So let's start. First transaction is in the year 2025, Jan 1. You can see the date column. The date column we start with the year. Year we will write only once. The date is Jan 1. As I told you that we have to read the transaction and try to identify the two aspects. The first transaction says commenced business with cash. Now, by seeing the transaction, we can make out we have cash. That means one aspect is cash. Now, other aspect, any amount or any asset with which we start business is called capital. And who is investing the capital? Jason. Right? Jason is investing capital. Jason is giving money to business because, as I told you in the last video, if you remember, separate legal entity. A business is an artificial person created by law. Right? So, Jason and business are two distinct persons. Jason is a natural person whose name can never be entered here, and his business is an artificial person. Right? So, commence business with cash. We have two aspects: cash, and just go through the previous video. I told you all the tangible and intangible assets are covered under real account. And what real account says? Debit what comes in, credit what goes out. Right? So, let me write it here so that things will be easy for you. Let us identify the two aspects first here. January 1. The two aspects are cash and capital. Cash is an asset, right? And what capital is? Now, just try to understand what I will say now. Capital will represent the entrepreneur, the owner, because I told you we cannot enter Jason's name in the books. So, capital represents the amount which is given to the business by Jason. So, capital is representative person because as the term is representing a person. Right? Now, let's think how we will give sides. Asset is a real account and any person is a personal account. What real account says? Debit what comes in. Now, one more thing, just keep in mind, whenever you are making journal entries, think from the point of view of business, right? Do not think from the point of view of any person, whether owner or outsider. Think from the point of view of business. Now, see here. If we think from the point of view of business, in the business, cash comes in. How? Owner is giving. Jason is giving cash to the business. So I am thinking from the point of view of business. Cash comes in the business. So what comes in? Debit. So we'll just write like this: cash account debit, because debit what comes in real account, and Jason is receiving or giving. You can easily make out Jason is giving money to the business. So being a personal account, we use debit the receiver, credit the giver, right? Jason is a giver and we will use capital in place of Jason. So I will write capital account here, and the amounts are 5,000 for debit and 5,000 for credit. One more thing I would like to say, guys, every debit should have equal credit. This is also an accounting concept. Both the sides will always be equal, should be equal. Every debit should have equal credit, right? So this is how we do the entry. Now you can see one more column which says L dot F. Let me tell you what exactly this is. This is nothing, but this is LF is ledger folio. I told you once after recording, we have to classify the transactions, all the expenses all together, all the incomes all together, assets all together, liabilities all together, and the books in which we classify are known as ledgers. So from the journals, we have to record the entries in the ledger. Now, suppose I have my cash ledger and I am recording this entry in the cash ledger. What is the page number of that cash ledger? I will write here. In this way, all the entries which an accountant will make after recording entries, when he will transfer the entries, which we call posting, right? When he record the entries in ledgers, he will write the page number of all the respective ledgers in which he will be posting these entries to. But as a student, we need not do it. We will just keep it blank. But it's compulsory to make this column and leave it blank, right? Now, after doing the entry, we will write a small description. What we have done, we just write a small description. Commenced business with cash, and we'll draw a line. First entry done. This small description is known as narration. It's known as NARRATION. A small description after the entry. Right. Now let's move on to the second entry. It's Jan 4. One more thing, guys, month and date. This is the sequence. Cannot write 4 Jan, just write Jan 4. Okay. Now, purchased machinery costing 500. Again, we can make out the two aspects. Jan 4. The two aspects are, we can see machinery. And when we purchase something and the entry is quiet, how we purchase, that means we paid cash. So the two aspects are machinery and cash. And you can see both are assets. Assets means real account. These are both assets. This is also asset. This is also asset. That means both are real account. And what real account says? Debit what comes in, credit what goes out. Yes, machine comes in and cash goes out, right? So we will just do the entry. Machinery account, debit, cash account. Debit what comes in, credit what goes out. And the amount is 500. 500. Purchased. This narration needs no grammar, okay? You just have to just tell a small summary of what we have done, small description. Now, next is Jan 6. Purchased goods costing 200. Now, let me tell you the story of goods. Suppose I deal in markers. I sell marker. Anything in which I deal is goods for me. Because I will purchase markers to sell. I call it inventory. Right? And any asset in which I am dealing, when I purchase those assets or sell those assets, I will not write the name of the assets. Just say that I suppose I deal in, let me give an example, I deal in toys. I purchase toys, but I am purchasing toys to sell, right? So I will not write toys in my books. For those items in which I deal, I trade, I use the word purchases when I purchase, sales when I sell, or simply I can use inventory. But I will use purchases when I purchase the goods and sales when I sell the goods. And purchases expenses, sales incomes. Right? So let us see what is the transaction. Jan 6. Purchased goods costing 200. When I purchase goods, I will write purchases as I told you, right? And nothing is given, so I paid cash. As I told you, any purchase is expense, right? Purchase is an expense. And cash is again our asset. Expense is a nominal account. An asset is a real account. Now remember, just memorize what nominal account says. It says debit all losses and expenses. That means expense should be debit and cash is going out. Real account says debit what comes in, credit what goes out. Right? So the entry will be purchases account, debit, cash account. And the amount is 200. 200, 200. Purchased goods. Now let's move to our next transaction. Next transaction, Jan 7 says, purchase goods costing 300 from Kevin. Again, we are purchasing goods, but this time name is given. I will tell you the story behind this. Let's first of all see the aspects. Purchase goods, Jan 7. First aspect is purchases, right? Because we purchase goods, as I told you. And purchases are again expenses. Being the nominal account, all expenses and losses debit. First aspect done. Now let's try to understand the second aspect. Now you can see purchase goods costing 300 from Kevin. Listen to me carefully. Any transaction of purchase or sale, if name is given, either of any business or a person, it is assumed to be a credit transaction. Credit transaction means cash is neither paid nor received. If it's purchased, not paid, and if it's sales, not received. Cash will be paid or received in near future. Credit transaction. I will repeat once more. Any transaction of purchase of sales with name of a person or a company, any business, is assumed to be a credit transaction and no cash is used. What if they mention purchased goods costing 300 from Kevin for cash? Then it's okay. If they say cash, no issues. But if it's silent, not telling us, right? You can see this transaction is not telling us whether cash is received or sorry, cash is paid or not. So it is assumed to be a credit transaction because name is given. Now name. When we have name for a credit transaction, we write the name. Name is a personal account, right? We know name is a personal account. Now, now think. Purchase goods from Kevin. When I purchase goods from someone, he is a giver or receiver? Yes, he is a giver. Debit the receiver, credit the giver. He is a giver, right? So, how we record this entry? Jan 7. Purchases account, debit, Kevin's account. And the amount is 300. Amount is 300. I will just write a small description. Purchased goods from Kevin. Now, next is Jan 8. Jan 8 is saying withdrawn cash for personal use. Now, there's one more story which I need to tell you. Personal use means not for the use in business. Let's take an example. I am Jason, right? I have a showroom. I have a showroom in which I sell electronics. Suddenly, I just need to purchase something for my personal use. I don't have my cash with me. I will take cash from my business money. That means I am using money of some other person because business is also an artificial person, right? Business is also a person. How can I use money of some other person? If I want to use, I need to use, okay, I am using it. But I have to give it back to the business. So, for business, drawings are the assets because business will expect this cash from the owner, right? Here, how we do this transaction using the golden notes. Let us see. Jan 8. We have two aspects. One, you can see the term used for any cash withdrawn or goods withdrawn for personal use is drawings. And withdrawn cash, right? Withdrawn cash. So, the two aspects are drawings and cash. Who is drawing money? Jason. But I cannot write Jason's name there. So I'm replacing Jason with drawings. So I will say drawing as representative person. That means it's a personal account. And cash we all know it's an asset. So it's a real account. Now think the rule of personal account. What it says, debit the receiver, credit the giver. Jason is receiving cash, right? He is taking cash. But I cannot write Jason. So I will replace Jason with drawings. Debit the receiver. And cash goes out. Again, debit what comes in, credit what goes out. 200, 200. I will just write a small description again. Withdrawn for personal use. Now next is Jan 9. Purchase machinery costing 1000 and paid by check. Whenever we pay by check, that means bank comes in picture. The two aspects are we have purchased machinery. So the first aspect we can see is machinery. And the second aspect is bank. Machinery is an asset, right guys? And bank is an organization, is a business, right? So bank is a representative person. Now again, asset is real account and person is obviously personal account. When we purchase machinery, machinery comes in or goes out. Think from the business point of view, guys. When the business purchases machinery, machinery comes in. So we just write here machinery account debit. Right now, I have to make payment, but on my behalf, bank is making the payment. Bank is receiver or giver. When bank is making the payment on my behalf, bank is the giver, right? So bank will come in credit side. Why? Because bank is the giver, making payment on my behalf. The amount is for what amount I am purchasing the goods, the machinery. I am purchasing machinery for 1000. 1000 and 1000. I'll just write a small description. Purchased machinery and paid by bank. Next transaction is Jan 12. Sold machinery 200 and received check. We can see the two aspects clearly, guys. Jan 12. The first aspect is machinery. Easily we can make out because we are selling machinery, right? And machinery again is an asset. Asset is a real account. Now there is a story behind the second aspect again, guys. It is saying that sold machinery for 200 and received check. Check. That means money has come through check. I have not received any cash. I have received a check. But listen to me carefully what I am saying now, guys. The transaction is not saying that whether I have deposited the check in bank or no. Why I'm saying this? Because if the check is deposited in bank the same day means the day in which transaction takes place, right? The day on which transaction takes place. Now, the transaction is taking place on Jan 12th, and they are not saying it that the check is deposited in bank the same day. When money is not received by bank is not receiving, how can we use bank? Make sense? So what we use? Cash, because till it is in my pocket, I still hold the check with me. It's in my pocket. It's not in the bank. Until I will pay the check in bank, how can I use bank? Right? I will use cash. Second thing, in some cases, in some books you will find they assume that check is deposited in bank the same day. Then you can use bank. But I am not assuming. I am going as per the law, as per the rule, that if the check received is not deposited in bank the same day, it is taken as check in hand or cash. Right, guys? So I will take it as cash. Cash is also an asset. Real account. Now, when I sell something, I receive cash, right? Cash comes in, and the thing which I am selling, the asset which I am selling is going out. Machine goes out. So, how will I do the entry? Jan 12. Jan 12, cash account, debit, machinery account. The amount is 200. 200. 200. I will just write a small description. Sold machinery and received check. Now guys, see, you can see my page is finished. When the page is finished, we total the both the sides. 5,500, 5,700, 6,000, 6,000, 7,000, 7,400. Both the sides should be the same. We write here. We write here how much it was. Sorry, I forgot. 5,500, 5,007, 6,000, 7,000, 7,400. Right? 7,400, 7,400. I don't have space here. I want to tell you something. What I will do is I will just remove it from, will make some space for the description. I will write the short description because I want to tell you something. Machinery sold. Let me make it small. And when I finish the page, I will make the total and I will write here. I hope you can see balance carried down. That means I have made the total of my page. The page can hold only these much entries, and whatever entries I have, the total comes to this. Remaining entries I will start in the next page. Let me make some space for the next entries. Okay, I'll just remove these because we have done already there. I do not think we need these anymore. I will just make how many entries we have to do? 3 more entries. I will make a small format again. 3 entries. We do not need a big one. Still I am making it. It's okay. Again, date, particular, LF, debit, credit. When I will start the new page, the first thing I will do is I will bring the balance from the last page. What I will write? I will write balance brought down, carried down. That means I have calculated from the page, and brought down means I am bringing the balance from the previous page. It's the same balance I will copy here. I have copied the same balance. Now I will start the next transactions. It's Jan 15, new page. Again I will write the year words. Jan 15, right? The transaction says paid salary. You can see the aspects. You can identify the aspect. When I'm paying something, they're not saying how. That means we are paying cash, right? So the two aspects are I paid salary, and the two aspects are what? One is salary, other is cash. Cash is the asset, right? Asset is the real account, and salary is an expense. When I'm paying something, it's an expense. An expense is which account? I hope you know by now. Yeah, it's a nominal account. Now let's see. When I pay cash, cash goes out, right? Because real account says debit what comes in, credit what goes out, cash goes out. And expenses. Nominal account says debit all losses and expenses, credit all incomes and gains. So what I will do is salary expense, expense debit, salary account, debit, cash account. And the amount is how much? 1000. 1000, 1000. I will just write paid salary. Now next transaction is Jan 18. Jan 18 received commission. I am receiving something. Wow, when I receive something, you can see it's income, right? Commission, I am receiving commission. It's my income. And how will I receive it? In the form of cash, obviously. When they're not saying bank, that means cash. Again, cash is an asset, real account. And commission income. Income comes under nominal account. And when I receive something, I receive cash, cash comes in, right? Again, real account says debit what comes in, credit what goes out. So, cash comes in, cash debit. And nominal account says debit all losses and expenses, credit all incomes and gains. It's our income. So, commission will come in credit side. And the amount is 500. So much commission, wow, $500. I'll just write a small description again. Received commission. Then last transaction, last entry, Jan 20. Withdrawn goods costing 100 for personal use. I discussed before also, any cash or goods withdrawn for personal use is drawings. Right? I am writing drawings in place of Jason. Again, drawings is a representative person. So, debit the receiver. Jason withdrawn goods, right? In place of Jason, I will write drawings. Debit the receiver. And in the previous transaction, he took cash. I owed cash. But here, he has taken goods. From where he will take goods? From the goods he purchased to sell? Obviously, right? So I will just reduce the purchases. Again, I will just write purchases in the opposite side because the goods are taken away. How much? 100. 100. 100. I will just write goods withdrawn for personal use. And once I've done everything, I will write total. I will make a total 74, 84, 85, 9,000. 9,000, 9,000. So guys, this is how we will use the golden rules of accounting to do the entries. In today's video, I have discussed the simple transactions to just make you aware of the use of the golden rules. In my next video, I will discuss some advanced entries, advanced transactions, and I will tell you some more complex things which we need to do while doing the entries. So guys, stay tuned for my next video. Just brush up, I always say, brush up your basics, practice the basics, and if still you need me to explain something more, you can say precisely, more described, in more you can say detailed way, just leave comments. I will definitely address your doubts and make a video for your doubts. So guys, stay tuned for my next video. Bye bye, take care.